Hey, what is going on? We're back with another week of the Financial Mirror. This week's episode is, as you can see, all about Wall Street bets. Not really just the meme stocks that they encourage. Um, yeah, so it's been a pretty wild week, I guess you can say. AMC movie theater company. If you don't really know what AMC is, I'm sure I think AMC's everywhere, right? I don't really know, but AMC has been not only the talk of probably your office, talk of the town, talk of family gatherings. If friends are hanging out, everyone is talking about AMC. So with that, I thought that it would be perfect to talk about AMC on this week's stream, because it's filled news headlines, and we're seeing, obviously people are having success with it, or more people wouldn't flock to it. So we're seeing tons of success around AMC, and specifically the huge gains that are coming with it. So 2 weeks ago, I did a video on cryptocurrency because there was this huge craze around Dogecoin, Bitcoin, Ethereum, a bunch of different cryptocurrencies, and I was like, well, let's talk about that. Let's look at how we can invest and how we can make money off of that, in the safest way possible. Obviously, there's no perfect way to invest where you're just completely risk free, but we were seeing that with the crypto markets. And now we're right back to where we were with Gamestop. So Gamestop, AMC was a part of that one before too. So if you're familiar with this, when this Wall Street Bets thing first sort of really took off a couple months back, that's sort of where all this sort of played out. So I'm going to talk about that. I'm going to talk about specifically. I'm going to get you caught up on what these like meme stocks are. And sort of what's driving this market. First off, I want to tell you that this type of market is not new. This has happened before. If you know, 99, 2000, huge like .com bubble, right? You had all these companies that literally were adding .com to the end of their company name, and all of a sudden, boom, there's the new stock everyone wants to buy into. So this isn't a new thing. It's definitely more, I would say, common now, right? Because you have tons of brokers out there that are offering $0 commissions, right? If you remember back in the day trading stocks, there was a $6.95 commission or something along those lines, maybe $11 or $9 or whatever. There was a commission that went with just buying the stock, right? And then you had to pay another commission on top of that to sell the stock. So you're automatically, back then I used Capital One Share Builder. For anyone that remembers Share Builder, that was my broker of choice, and they ended up becoming E-Trade, I believe. But what ended up happening was, or getting bought by E-Trade. Let me clarify that they didn't become E-Trade, but so. It's changed a lot now because we have these like retail investors that are being called, they're not bulls, they're not bears, they're calling themselves apes, right? Like these are the apes of the market. They're just, wild millennials on the market, right? So it's definitely changed the aspect of the market, and that's where I want to dive into this, because no matter where you are knowledgeable, wherever your knowledge lies on this whole topic, I want you to walk away from this stream, this episode, this podcast, if you're listening to this on Tuesday or thereafter, that you can make smart financial choices for yourself if you're buying into this. I'm not here to tell you to not buy these stocks. I just want you to make smart investments and make sure that you're buying these on the correct premise. And I'm going to go over a couple of those things today. So a lot of this, if you're listening to us on the podcast, a lot of this is going to be focused a lot on, I'm streaming this live on YouTube and Facebook. So if you want to look at this later, you can always go back and look. But I'm going to have some things up on the screen so that the people that are watching it can see some of the things I'm talking about. And then I'll talk through a lot of it, so that if you are listening to this in an audio format, that you can sort of follow along. But but I want to try to show and talk through this whole entire thing so everyone can get a grasp of what's going on here. So what are these meme stocks, right? I threw up this WallStreetBets photo, boom. If you haven't seen it, I'm sure you've seen it, and there's tons and tons of meme photos out there. I thought about actually like flicking my hair back and like throwing my shades on, but I didn't have the suit. If I would have had the suit, I probably would have gone that route. But since I didn't have the red tie and the like whatever color suit this is, I don't even know what that is, like gray or black. I can't tell if that's just texture, like the color. Anyways, I was gonna go with it, but didn't have the suit, so we'll go with something else. We went with the Financial Mirror shirt. It's all reliable. So what are these here like meme stocks, right? So really quick, I'm gonna sort of breeze through this because I'm not gonna hold up all the knowledge I've got coming later on to just talk about this for people that already know what this is. But my best description of what a meme stock is, or this whole thing that's going around, is a stock that's pushed and to gain hype through social media. So social media is the avenue of building this hype or building this momentum or building this craze around a particular stock, right? And this has been done through Reddit largely, specifically WallStreetBets. That's been the huge Reddit format that or forum or whatever you want to call it that has been pushing a lot of these stocks. But Twitter, YouTube, blogs, anything where people have a chance to get their voice out there is being used to push these meme stocks, okay? And I said earlier that there's this term, apes, that comes into play, that people that are sort of buying into this whole concept is of these retail investors that are sticking together to drive a lot of these stocks. You'll hear terms like drive it to the moon, right? I had a picture that I pulled. I think I still got it. To the moon, right? This is the to the moon logo right here. So as obviously you can see to the moon being below Earth. So stocks going down. Anyways, it's not technically true, but yeah, I don't really know. I thought it was funny. So anyways, so that's what a lot of this whole meme stock is. Apes, this whole apes thing coming to play. You'll see people posting these like apes together strong and ape army and all this other stuff. Anyways, they're just slogans that are out there that are all around building hype. Because once again, the more hype you can build around the stock, if you can see on the screen, that's what this is. This is hype. This is nothing but people talking about it. This huge upwards trend starting on May 24th. And continuing. You see a lot of the pullback now, but a lot of that is just driven off of hype. It's just driven off people talking. It's just driven off of these posts, right? So where did this actually start? Like, why did WallStreetBets all of a sudden say, okay, well, like let's build this hype? Well, the biggest piece, and I'm not going to get too technical on this whole entire thing. I'm going to show you real quick if you're not familiar with the concept. I'm going to draw it out on this chart right here. But you have to create the hype to recruit these like other apes, right? Like you got to recruit other people. You have to recruit other retail investors to start purchasing the stock. So this account, we're all, this WallStreetBets, where all these people are coming together and recruiting, right? They're trying to build hype around a stock. You have to get that to drive the upswing. But why do you want the upswing? Well, obviously, first off, to make money, right? Like people are making money. They, in common terms, you'll hear them called pump and dumps, where you literally pump the stock up, and then the people that were doing a lot of the pumping got in, along this line right here, before the thing took off. They pump it, they get you in, and then all of a sudden it shoots up. They sell, and you're sort of just left holding the bag. That's the idea behind a pump and dump. That's what you'll see. But ultimately, you've got to create hype around a lot of this stuff. So this is a WallStreetBets hottest meme stocks website that was created, memestocks.org. And what it does is shows how many times someone mentioned or memed a particular stock on WallStreetBets. So I'm going to refresh it. I don't know if any of them have updated. Right here. So BlackBerry. BlackBerry is currently the top meme stock with AMC behind it. This is a Clover Health, Gamestop, and so forth and so on. But all you're trying to do is see these top stocks, and if people are talking about them, people are being driven to get the hype and buy into those. So what ended up happening was, and the reason why all this started was that WallStreetBets ended up seeing that a lot of hedge funds were out there, big companies, huge amounts of shares that they're trading hands with, and they were out there shorting GameStop. That's where the GameStop, AMC, many others a couple months ago, and it's never really slowed down. It's never really lost its hype. But for anyone that doesn't know what shorting a stock is, it's pretty much where you're making money when the price is going down. So if you've never known that you can make money with the stock price going down, that's what shorting is. Shorting is where you do just that. So just because these are some big candles right here, I'm going to give you an example from right here. So let's say I want to short this stock at, $63. Let's just say that's about $63 where I just drew this line. If I was going to short this stock, how would I make money with this market coming down? Well, the idea is that when you think of shorting a stock, you just have to remember that you're selling before you're buying, right? So you have to sell first and then you buy the stock back. So you pretty much, you borrow the stock so that you can sell. You're selling someone else's stock, right? You're shorting that stock. So right here, you would sell the stock right here at $63, and then you would buy it back. Let's say you bought it back right here at, let's move this up to 50. So like $50, you bought the stock back. Well, if you bought in at 60, if you sold first, you sold it, one share at $63, and you bought it back for 50 to return the share, you would have made the difference, the $13, right? So that's how you short a position, right? So obviously, if the money goes the other way, so $63 you sold the share, and now the price goes up, and let's say it goes up to $70, right? Somewhere in this area right here for giggles. Oh, that's dead on. So $70, and it was at 63. You're going to lose $7 because that's the difference. You now have to buy the stock back that you borrowed at a higher price than what you originally sold it for, because you're selling first. Remember that. So that's sort of how this whole thing came about. It's what WallStreetBets noticed was that a lot of companies were shorting GameStop, AMC. So the idea was that if you could drive the stock high enough, you would literally bankrupt these companies. Because if the people that are in a short position, they lose money as the stock goes higher. If the stock was coming down, they would be making money. So that's the simplistic way. But you have to understand that to understand where all this actually came from. Okay, so that's sort of the mindset, and that's sort of where we've gotten through the past couple months of running this whole scheme of WallStreetBets and all that. And they're losing. The hedge funds are losing hundreds of millions of dollars by this. Okay, let's clear that air right now. These hedge funds are losing hundreds of millions of dollars because of that one thing right there. So how are people making money? Well, it's pretty obvious, right? You understand the concept of what's going on. You have people that are buying the stock and, increasing the price extremely drastic, right? Like this is like, that would have been about the takeoffs of 1, 2, 3, 4, 5, 6 days at its highest, 6 trading days at its highest, and then it's starting to obviously taper down just a little bit. But people have different ways of buying stocks, and I wanted to go over them so that you have an understanding as we get into this AMC piece. Specifically, AMC is what I'm talking about, but this is obviously can apply to any of those other ones that was on that page, right? So BlackBerry, AMC, GME, Workhorse is another one I've been seeing a lot of people talking about. But there's a couple ways that people invest, right? So first off, there's fundamental investors that look at cash flow statements, balance sheets, earnings per share, all this stuff. Anything that's on paper that values a company more of like a long-term outcome, right? There's technical chart traders, which they look at they look at where charts are at to determine like patterns, history, momentum, stuff like that, to try to make determination of where they think the price is going to go. And then there's these news and hype traders. They're new news and hype traders. And these folks are looking at new releases of products, services, hype, like WallStreetBets out there. And And that's what a lot of people are using in this sense. So these types of traders are out there. So how does this affect AMC and other meme stocks, and how people are making money off of these, right? So fundamental investors, just for starters, if you're investing in AMC and you're a fundamental investor and you're watching this and you're like, yeah, like I think they're a great company, I really see the outlook on that company. Okay, you're totally not in touch with the reality. They're down 15% on revenue for 2020. Their debt's constantly increasing. Like, I don't know what you would look at and say that they're looking great and they're just going to boom, but I don't think anybody's actually thinking that. So we're going to do away with fundamental investors. No one's buying AMC because they fundamentally think that they're just this great, grand company. They did make a smart move, though. They are now selling off a lot of their shares during this inflation of their price, and they're making a lot of money back to clear out some of their debt. Very smart decision by AMC. But anyways, technical traders, I'm going to pull this up because I want you to see technical traders out there that you can look all over the internet, and people are posting all of these ideas and theories that they believe AMC is going to do. Like, here's one: AMC not in a good spot, recovery possible though. AMC on the way to the moon. Like, these were posted yesterday. That one up there was 9 hours ago. But you can see AMC to the moon. People are drawing all these fancy charts and patterns, and this is what it's going to do. Look at this. Oh yeah, this thing's going to wiggle through this symmetrical triangle right here, and it's just going to explode out of the top. Like, you can Google this stuff, and I'm on TradingView right now looking at a bunch of the TradingView. If you go to TradingView and then you go to Trading Ideas, you can see a lot of these drawings people have done, but you can see these are technical ideas, and if you believe in technical ideas and you're basing your trade on this, it may or may not work out for you, but this is another way that people are making money off of it. So if you think that, if you see one of these, you're like, wow, like I understand what they're saying or whatever, and you want to go with it, and that's your basis behind, that investment, go for it. Go and invest in a couple of these companies. But you can see I'm looking all across TradingView, Trade Ideas, and AMC's everywhere. I mean, it's everywhere. There's tons of ideas out there to look at. Now, the last one is the news and hype traders. Okay, and being honest, this one is most of you that are watching this. If you're invested in it, and if you're thinking about investing in it, you're probably this as well, because you probably are not. You probably don't have all the technical knowledge that you need. You probably, those charts, those candlesticks, you're like, what is that? Like, I mean, and that's okay. You don't have to know what that is. But what I'm telling you is, this is where most people are investing their money out of, is just hype, just news. And I'm not knocking you, and just being honest, I'm not telling you not to. So I'm not telling you not to go out and invest money into hype, because it obviously, if you can get enough hype, you will make money. So what I'm going to tell you though is, when you're trading around this hype and this news, the hardest part of trading around hype is determining when that hype is ending, or when is that hype starting to fizzle out. In this whole like meme stock era that I've been talking about, you'll see these things like diamond hands, right? Like that and all these are all like jargons that have gained traction around this whole meme stock thing. But you'll see things like diamond hands, right? Like, hold the stock, don't give up hope. You got to keep holding. If you want those diamond hands, hold the stock. And that'll lead you to like slogans like "hold the line," right? From this, like a Game of Thrones reference. So don't sell early. You gotta hold the line, or if you don't, you've got these quote unquote, you got paper hands because your hands crumble, right? Like, you gave up hope. Like this is real. Like, I'm really not making this up. Like, I'm sorry, it's pretty comical to me. But diamond hands, paper hands, hold the line, ape army, like all this, like you can see, like this is all like stock hype, like jargon, like drink the Kool-Aid, like get you're on this thing, right? So So should you make money off of this? Should you devote your hard-earned cash into these meme stocks? Well, first off, I'm going to start off and give you my disclaimer. I'm not a financial advisor. I'm not here to give you financial advice. I'm just here to educate you and put you in the best situation possible to increase your financial outcome. Okay. So anything you put into any investment, you have to know that you can lose every single bit of it. All right. I'm not telling you to not invest in these hype meme stocks, but I must say that there's risk involved in doing so. So on to the how-to. So this is how I am recommending people to invest in meme stocks if you're going to invest in the meme stock hype. Okay. So I'm going to bypass the idea of fundamentals because, as I said earlier, you're not in touch with reality if you think that AMC and many of these other companies are making money. I mean, hedge funds were shorting these stocks for a reason. Like they are not in the best position to make a ton of money. So shorting the stock is how you're pretty much betting against that stock going up, right? So if you're thinking this stock is going to go up in value, not in touch with reality. Okay, so moving on to the technical side. Most of you that are listening to this or watching this are probably not trading technically, and if you are, there's tons of opportunity in there to trade on a technical aspect. So if you understand technical trading, if you understand technical charts, put you something together to learn, and invest in this, with a high volatility. Technical traders love volatility, so it's This is a perfect opportunity to make money if you're a technical trader. But the real thing I want to cover is for people that are trading based off of the hype and the news and all that's coming out with it. And I sort of alluded to this earlier, but you have to know when that hype is sizzling out. When is the hype of the stock no longer worth holding the stock itself, right? Like, when is it time to sell? Like, that's the number one question everyone has, is when's it time to sell? So what I'm going to first tell you is having paper hands is okay. All right. Paper hands is a great thing because actually having paper hands using this jargon, right? That is the reason you will have bigger diamond hands in the end. Okay. So if you will have paper hands, you will most likely have bigger diamond hands in the end than most of your counterparts that you're probably talking about this with. So you have to realize, first off, that this stock is only at its current price. So it got up to $72.62, and it has only been able to gain that momentum because of the simple fact that people hyped it. Okay, people hyped this stock and it got up to that price. There's nothing that says the stock is worth that. There's absolutely nothing that says the stock is worth that. Does that mean you shouldn't trade it? Well, no. But what it does mean is that you have to remember that this price is not going to stick around forever. Like, it's going to come back down. Like, you can see it hung out in this area, and before that it was way down here around $2 and $3. It had this other previous little meme stock time frame, which is back in January. Then it hung out around $10 or $11, and now it's boomed to 72. Okay, so it's not going to be there forever. It's not going to be at $72 forever. So keeping that in mind, is very important to remember that selling off parts of your position is a wonderful thing. Okay, so you've got to make money. You've got the whole idea behind the whole reason you bought into this was to make money. So selling off a third of your position. So if you bought 15 shares of AMC and it's boomed, maybe sell 5 of your shares, right? Maybe sell half of your position. Maybe go and sell, you bought 20 and you should now sell 10. Like lock in some of those profits, because you never know what's going to happen with this thing. Okay. So if you bought, what I'm saying is, if you bought down here at $11, which I've been hearing 11 is about the time this thing started getting a lot of hype and people are, started buying into it. If you bought into this at $11 to $13, it looks like $14 ish, and you're still holding the same number of position, the same position size that you originally bought in, and it's done all of this up to $72 and even came back the next day and got as high as $68, and you haven't sold any of your stocks yet, any of your shares yet, I'm I'm telling you that you may end up with some paper hands that you're going to break even. I'm not going to say you're going to lose money, but if you look at all of this other movement as potential earnings, I will say that all of those potential earnings will be no more, because this price is not going to last forever, right? So it's important that you see that, and you start to sell off some of your position, right? You don't have to sell all of it. I'm not telling you to, well, if it hits 72, sell my whole position, and because that's not really managing your trade either, right? So you see all this movement happening, but sell off parts of it. So that's the real key to success when you're trading out these volatile stocks, is to make sure that you're locking in profits along the way. And maybe that's every $10 I'm going to sell one share. I don't know how you want to do it, but you've got to lock in profits along the way. You can't go every single day, well, it's going to come back. It's going to go back up to 72. I got to wait till it goes back to 72. That's not how the stock market works, my friend. So it may never touch $72 again. I mean, for as long as this company exists, it may never touch $72 again. So you've got to understand that. You have to understand that I've got to sell off some of my shares. This whole entire thing is a game. You have people that are buying something that's not worth what they're buying it for, and you've got to take the money. Whatever that market's giving you, you've got to take that money. All right. So that's the first thing. You got to remember when that hype's starting to fizzle out and take profit along the way. And then one other way that you can invest into these like super volatile meme stocks is through, there's two that I'm going to speak on specifically very quickly. These exchange traded funds, ETFs, that are specifically made to track these type of stocks. You have one called the FOMO ETF. I'm not making all these up. These are real. But it literally stands for fear of missing out ETF, and they track a lot of the meme stocks inside of their portfolio. And then you have the Buzz ETF, BUZZ. So FOMO is the ticker of the ETF, the fear of missing out one, and BUZZ is the other ticker for the other ETF that is following these meme stocks. So both of these were made to follow and rebalance based off whatever that current trend of the social market really is. And so if you don't want to sit around and try to figure out what the next meme stock is going to be and all that, these ETFs are, a great way to jump into those, gain some extra cash along the way. But what I do want to say is, if you ask me, do I back them? I mean, I don't know much about them. They're fairly new. A lot of ETFs that I look at, mutual funds that I look at, they have a nice little, 5 and 10 year history behind them to go with them. So you have to decide if you want to risk that or not. The good thing about them is that I looked at their portfolios, and there are other stocks in there. So it's not just these quote unquote meme stocks. So they are invested to continue to grow your money throughout multiple stocks. So wrapping this up, I hope that you can see just how meme stocks work. More importantly, sort of how you can become more knowledgeable about investing in them. The biggest things, and I'm going to leave you with a couple of takeaways, and these are probably the most important part of this whole entire stream, this whole entire episode, is I wanted to ensure that I didn't do anything from preventing you to buy into these. There's huge opportunity in them, and I'm telling you, I'm the first to tell you that you have to take advantage of those types of opportunities, just knowing the risk that comes with it, okay? So people trade stocks of this manner, and everyday people are making money off of it. So that's for starters. First thing foremost, people are making money off this. I'm sure I know, a lot of people know, tons of people that made money off AMC last week. Looking at it on this chart, if we look back to last time this thing shot up, you can see that it had that initial boom on the 27th of January, and it sort of played around, and then it came back down. This down here at the bottom, this relative strength index, RSI, this shows sort of, it sort of gives a guideline of when stocks are overbought. And vice versa down here around below 30, considered, some people say 20 or whatever, but it's somewhere give or take. Above 70, below 30. Above 70 would be considered overbought. You can see If we go to today, this was last time on the 27th, got extremely overbought, and it never really got back into that territory. Sort of just fizzled out, right? Right here on June the 2nd, you can see this thing was the day, that was the day that it hit the $72. You can see that was its highest RSI. That was the highest relative strength index. And you can see this thing's starting to come down right here on the 27th. On June the 2nd, June the 3rd, June the 4th. You can see the volume steadily decreasing. So, I'm not saying that the hype is running out. What I'm saying is that if you haven't taken profits at this point, you've got to start looking at that piece, because this is the type of stuff you have to look at. You have to look at, these things are extremely overbought. They're extremely volatile. People are making money, but if you're still holding the bag, you probably should go ahead and get some paper hands. Go ahead and buy some paper hands. Cash out just a little bit, because you can see a lot of things are pointing that this thing could be running out of strength. I'm not saying it is running out of strength, right? This thing could explode tomorrow, right? But I want you to start being cognizant and noticing a lot of this stuff. So be smart when you're investing. So, you have to be willing to risk whatever it is you're putting in. I'm telling you, I've seen articles. People are like doing like home equity loans and cashing out savings accounts and cashing out 401ks and IRAs and anything else to get on this get rich quick idea, right? Not a good financial plan. Strongly discourage it. Okay. First off, remember the price of these meme stocks are not going to be forever. The price of AMC is not going to be where it is today forever. So paper hands are good. Like I said, go buy you a pair of paper hands. Don't think cashing out means that you're going to miss out. Okay. So if you walk away with more money than you put in, even if it's not the most you could have made, if you walk away with more money than you put in, you are winning. All right. You literally just earn free money. Take whatever money the market's going to give you and be happy with that. That leads me to this last thing, is to stay smart. Okay. Stay smart. The brain is a super, super powerful tool, and it has its way of doing these super miraculous things, right? One of those miraculous things is that it will tell you that, oh, this thing may come back. This thing may be over, right? Like I'll use the opposite side too. This is over. Oh, I got to sell my position right now. And then all of a sudden it explodes. I'm saying that from both sides. The brain has a way of taking control. And if you've never been in a real trade with real money, the brain really has a way of bringing out some emotions inside of you. So if you think you're going to outpower your brain, you're wrong. Greed is a true way that traders try to outpower their own brain, and it's just not going to happen. You've got to understand that especially if you're investing in meme stocks specifically, that the whole FOMO mentality, you can't go into it with that. You can't fear the idea of missing out on this thing going up to $80 or the $100 or $1,000 or whatever. You can't be thinking about it from that mindset, because you can always say, wow, I could have made an extra $50, right? You can always say that. But if everyone could operate with this beautiful hindsight, we would all be perfect, and you wouldn't be watching this right now. You wouldn't need to be watching this right now, and you would already have every answer in the world. But the same way that someone can say, man, I could have had that extra $50, the same way someone could have said, man, I just lost $150 by not selling. So it's both ways. And you have to set solid points where you're like, okay, if it drops to here, I'm selling. If it goes up to here, I'm selling. You got to have those places in mind, and don't change them. Leave them where they're at. Don't change, letting greed kick in, saying, oh, well, it just got to there, so maybe $5 more, and then all of a sudden it just collapses, right? Don't let greed take over. So once again, that's my biggest take. That's my biggest thing that I really want to drive home, is to not be afraid. Do not be afraid to take money off the table. Do not be afraid to take the profits that are already out there. Don't sit around thinking that you're all of a sudden gonna just be this millionaire, right? Like that AMC is just gonna make you a millionaire off $5. Like that's not the thing. It's not gonna make you. You're not. If you went and did a home equity loan, and and you took out $50,000 of home equity and you put it into AMC, it's a chance you could, make a lot of money, but there's also a chance that you just wasted $50,000, right? Like, I mean, it's a trade-off. Don't put your life savings, don't put your, Dave Ramsey says your kid's college fund and all that. Like, don't do that. Like, just if you have some extra money to jump into AMC and see what you pull out, cool. But just have that in mind, knowing that this stock is only based off of hype. The price is only based off of hype, and you've got to get out when you have made money. Don't sit around and try to wait for this thing. So I hope everyone got something to take away from this today. This upcoming week's going to be interesting. AMC is going to open up. This is an interesting setup right here. If you're familiar with technical trading at all, this is a very interesting setup that we got. So this upcoming week's going to be interesting, and we'll see if we get more AMC movement to the upside. We definitely could see it go higher, or a sell-off could happen. Like, who knows? Like, no one really knows. If you're listening to this stream on the podcast on Tuesday, you already know what happened on Monday. So I don't think the hype's over just yet. I think that looking at history, last time there was a big sell-off right here around the 27th till the 1st of February, or excuse me, on that first day, that huge spike, it sort of had another little uptrend before it sort of went down and corrected itself. AMC is one, but if I pulled up like GameStop, you can see this thing sort of spiked. This thing sort of spiked twice, right? So GameStop sort of, like I said, it sort of dropped and came right back up. So it's going to be interesting. That's all I can say. It's going to be interesting. I'm not here to tell you to buy. I'm not here to tell you to do anything. If you're already in, I'm just telling you, take profits when you can. Take them when you can. We could be at the fizzle out. I mean, I don't know. The hype could be over. I don't know. It could have a sell off tomorrow. Like, I really don't know. But just remember, you have another chance if you haven't closed down any of your position to do that. All in. If you've enjoyed this stream, don't forget to hit the subscribe button. Subscribe to the channel. I'd love to have you as a subscriber to the channel. Also, go out and share this with any friends or family members, coworkers, anyone that you know that can always use a little financial discussion in their life. That's what this stream is all about. Share the podcast if just for quick sharing, YouTube, Facebook, and if you're on Facebook watching this, go ahead and like the channel. Go ahead and like the video. Support me in any way you can if you see fit, if you're really enjoying the content. Thanks for tuning in, and until next week, peace.